Good afternoon and welcome to the end of day review for today. And today is April 18, right here, 2024. No, 18 right here, which is a Thursday. The last 3 days we see the huge down move. Monday and then Tuesday kind of dozy, and Wednesday show off, and then Thursday very interesting. We're gonna see in the charts how it moves, but very interesting move. And we are in week 16, which is the first 3 weeks of second quarter right here. So we have second quarter, and the first 3 weeks is it's sell out. And we already mentioned last time, this is the critical week of the non-farm payroll where the market shift to sell. And we saw that yesterday we saw that with the we saw that with the with the smart money diversion, right? That's what we see, that with the smart money diversion, and we see at the Q where's our journal? Just keep remind ourselves about this beautiful picture right here. You see the smart money happen at April 1st, 2024 on a Monday. See that? That's where the S&P future make a higher high, but the Nasdaq make a lower high. That's the first day, trading day of the first week of the second quarter right there. So that's the beautiful signal right there. And the smart money, we just learned the smart money diversion. It can happen anytime, but the high probability or the best setup is on certain time. In this time it's very special. It's on April 1st. So that's the time alignment, also critical factor. Like today, we can look at the chart. And yesterday also. So there's some diversion on the low time frame, but it's not always reliable. So it's only reliable when the time is alignment right there, the critical time. And smart money diversion is one of the indicator that we use. So we know when to see that the sentiment or the market structure shift from sell to buy when we look at the charts right there. So that's we're going to review this many times, put into our subconscious mind, so we know that when the diversion happen and the time alignment, that's where we can go in and short in this case, or go long if the opposites happen. Alright, so we are in week 16 and the first week of this quarter, and 16 week right there. The next economic event that we anticipate or we're looking for is April 25th. April 25th right here, which is Thursday. So on the 24th Wednesday, we watch very closely because we especially for the last hour. That's the phenomenon we see last time. Last time it's released on 28. The last hour is run. It just explosive to the upside. So that means that the algos, kind of set into the buy program right there. And this time we want to take advantage of that move. That move is called low resistant liquidity run, or it's just a so-called impulse move. That is another term, that you may heard. Some people call it, ICT calls low resistant liquidity run. But other people they call impulse move. Or another term is called clean, price action move, or it can be a manipulation move right there, or it can be a distribution, which is either way. Yep, either way. So that's an idea right there. So our job is try to catch a move. It can go either direction. So we'll focus on the Wednesday before that, especially the last hour, the final trading hour, because we want to catch the move, the manipulation move right there. And then week after that, is that right? Week after that, yeah, week after that, the 30, we have Fed meeting, and then we go back to the non-farm payroll. So the non-farm payroll last time we have is April 5th, and you see that after that it starts sell up. So non-farm payroll can give us some signal right there, because it's the first week of the month. And if we look at the weekly charts right here, we can see that from April, the very first week, April 1st, right there, it starts sell off. This week, look at that. Let's see how this week close. But you see the gap right here, it's closed the gap. Yeah, it did. Wow, amazing. It closed the gap. Let's see, it's gonna be rebounds from here. So basically the market seek internal liquidity range. Right here, it take the external liquidity and it moved to internal liquidity. That's how liquidity run. So basically it go from internal range liquidity to internal range liquidity. In this case it can be the imbalance, right? And then it need to rebalance. The idea right there. So because it's imbalance, the gap right there, and external liquidity range, external, range liquidity, basically is a high and low, right? That's a high and low, or stop loss for that matter. Stop loss or stop hunt, right? Stop loss. So that's an idea, So that is the first 3 weeks of the second quarter of this year. It just sell off right there. Alright, let's now look at it to see if we can apply. So basically today, Thursday. No, before going today, we thought that Wednesday is the week low, right? Or at least before 12 noon, we thought that Wednesday is the week low. But after the noon, it changed the dynamic. It go check the low of the Wednesday. So that means that the Thursday gonna be the week low. Maybe this one right here. But it doesn't match completely because alright. But yeah, the Monday is supposed to be right here. So last 2 days keep coming down like that. Right. Here's our daily. So you have a Monday, you have a Tuesday, and then you have a Wednesday, and now we have a Thursday. So do we see any of this pattern on the weekly profile from ICC? Maybe this one? No, it doesn't match. No, we don't see any match, do we? Yeah, all 4 days. 4 days in a row is down close. It's very unusual. Yeah, we don't see it here. We don't see any. Check it carefully. Yeah, we don't see. Very strange. Yeah, it's not there. So we don't see it there. Then let's see if we say any so let's see if we see any setup for today. First, do we see the do we see the swing at 9:30? Take out the low. All right, maybe. Let's see. Model 1. Oh man. Okay, Model 1. Let's see if the Model 1. Okay, let's expand this chart a little bit. So here is right here. $15 minutes. It did not have a swing that check out the Yep. Right here, it did. Wow. We should see that model. You know, don't count from here. In the IC model, it's just mark this level, which is the PM. The Q2 and Q3. I mean, where's the PM? 1:30, right there. So that's the 1:30 until 4. Yeah, this area right there. It's basically Q2 and Q3. Yeah, Q2 and Q3. And it did that. It did have the swing. Check out that. Oh, we put the buy stop in here. That's the one that we missed. Yeah, so basically we make this setup today, the ICC Model 1. Right there. So the swing at 9:30, you see that? 15 minutes. Sometimes the swing can last an hour or 30 minutes. In this case, only lasts 15 minutes. See that? It rate the previous day PM liquidity, the sell side liquidity in this case. By the way, we did take the long trade here, but the setup we use is a little bit different, because right here we see that, you see the gap down right there, you see the breakout level right here, at this level 50-57. We see the gap down, gap up, and the retest, and right here is a double retest, and we did take a long trade, and you know what happened? We target right here, exactly, beautiful right here. But you know what happened? We move our stop loss up here and up here. That's where we fell. That's where we make mistake, because we are greedy. Actually, we make about 9,000 right there, $9,000 right there. But that's a mistake we make. But go back to this setup. So this setup have a lot of confluence in here. It fit with ICT model 1, which is the Judas swing at 9:30 sweep this guy, sell side liquidity, and also it fall into this right here. We see that the balance price range double retest. It retest right here, and now it retest one more time. That's the reason why we call the term double retest. Let's look at our screenshot so we can see balance price range right here. I think let's open this so we can see. Okay, it's a double retest. How you heard, so called double push also, or double sweep. So here's our step right there, but we forgot the ICT model also. Yep, it's so perfect. You see that? Retest twice. In this case, we should call it, we just rename it double retest. It sounds better than retest twice. So let's fix this for now. We want to make it look better. Hold on. We want to open this. We want to edit this. Okay, so we added this. Let's say right here. No. Okay, we're gonna background so we can override that one. So balance price range double retest, so better than retest twice. Let's see if we can manage to do this. Yeah, perfect. Hold on. Okay, then we have to move this one up just a little bit. Alright, it's look better. Okay, not perfect, but it's much better. So balance price retest right there. And by the way, we have another confluence, which is smart money diversion. So we have a lot of confluence right here, and at a critical time, 9:30 is a time alignment right there. Hold on, let's see. Where is our smart money diversion? Okay, right here. We did take a screenshot right here. And we name the smart money right there, diversion. This is the Nasdaq NQ, right? Smart money at right there. So the ES that we are trading make a higher low, but the Nasdaq make a low low. So that's the beautiful diversion for it right there. Okay, so basically save it. Okay, so right here we have everything. We have balance price range, double retest, and we have a smart money diversion. Then we put the buy stop right away, go in at this level at the close of this candle. So it's about 55 right there, and our stop loss is right here. That is our trade right there. We should add one more right here. Right here we also see that it also sweep. We also say that we just ICT model 1, which is what UDA swing at 0930. What that do it no, we don't want to background this one. All right, the UDA swing at 930 ICT, what it do, it create or sweep another time, sweep the prior day, PM low, or sell side liquidity in this case. So we have another confluence right there. Let's put a note right here. So note. So we have everything, and that's the reason why the move up is so explosive. And we just do a test. We test our greedy. That's what we do, but we learn. We want to make mistakes so we can learn. Because we want to see how the idea let the profit, not let the winner run. We want to practice that to see how it works. But we have some lesson that we can draw right there. So right here, and you see right there, that is the prior day PM low sell side liquidity were rated. It just sweep, you see, it not close below, it just simply sweep the liquidity or rated liquidity. So we have a lot of factor in here and your diversion, so perfect to go long. Beautiful. That's where exactly we want to go long. Save it. Let's see if it's pop up. Oh, okay. So we fixed this, so it's updated right there. Yeah, man, just look for this setup. That's the setup. It's the ICT model 1, but in here we have more detail. We have more confluence that give this model 1 a beautiful high quality right there. All right, what I need, and right here we may add into this model. Right here we can add things like if smart money diversion, and or what else? balance, right range, retest, or in this case better, or double retest, but just let's go with the low denominator right now. So if it is operation, what I will have, operation is there, then then we will have a very high property setup, then a very high probability very high probability setup is forming. Let's go with that verbiage for now. Okay, let's come on. Which is today, in this case today, is have a smart money day version. Why is not liking? Okay, so that's our note. So if we simply have the Udar swing and it's with the Friday PM low or high liquidity, sell side or buy side, and then if we have these two, then there we go, we have a beautiful setup. Then a very, I think very high, and a very high property is forming right there for us right there. If we see that, then we know it's forming. We can go in and engage. We can take the trade. So a high property setup, when we see all the condition is there, it's have an ingredient for a successful high quality setup. And that's how we train ourselves to do that. So that's a beautiful note for us right there. Let's save it so we will not. And now let's see if we can open it again. See if the chain we make is there. Oh yeah, so it's there. So good. All right, so go back to this setup and go back to the charts and we can see. Yeah, that right there. That is right there. It have everything. Now look at the live recording. Right here we see. We do live recording. We try to record every day so we can review them. So look, we don't need the volume for now. Just see. All right, so we see 9:30 right there. You see, look at that, right? By the way, it's the 15 minute on the right and the 1 hour on the left right there. So we do a pair time frame. See, by the way, the reason why we put the range right here, because you see the breakout level right here. So you see it break down and it gap up, gap down, gap up. So if someone take a short right here, it work out well, because when you want to short a breakout level, you want to make sure that it's close above that, and then the candle that you want to entry have to be above that. So you put the sell stop in there, and vice versa. That's the lesson we learn. And whatever who short right here, I think we make a mistake right here. We put a buy stop right here, and we get stop out. But we should short them for the first 15 minutes. That's what happened. You see. But anyway, let's go back to the swing. See, wow! Look at that, and look at that right here. When you see it sweep this liquidity, it reverse. Yeah, you see that? So it's go below this at 55 right there, the Friday PM liquidity. And you see that as soon as whip, it start reverse. Yeah, you see that? It reverse. It pull back. Yeah. And it goes here. Balance, break range right there. Balance, break range, retest one, retest twice. That. And we put our buy stop right here at the 50-55 right there. Did we do that? Yeah, we did, right? Right here, which is right here. Yeah, we would buy stop 55 right there. That's exactly we entered right there. And then that's how we enter it. And look, you're gonna see the explosive move. You see, after it retraced right away. It pull back, and then look at the next candle. So you see the magic right there. It rate this buy side liquidity. Excuse us, we misspelled. It's sell side liquidity. Then it closed above that. It didn't close below. Look carefully. That's the signal right there. And the next candle, what did it do? The next candle, I think it's open above this. Right, look at the chart. The next candle, which is right here. What the open of this one? 57, which is 1 point up, no, 2 point above this. Because this is at 55. So it's 2 points. So they open above that. So it open above. So that's the bullish signal. This one close above. Right, close above, and this one also open above and retest the low before go up. That's what it's doing. Yes, it retests the low. Right, you see that? That look in the charts right here. Okay, so we see this one. What the low? 50, 55, 75. Right, and this one, yes, this one is the low. 56. Yeah, so it did retest. Open direct the low. You got an idea. Yeah, and then you see the explosive move. Look. Wow. Look. Wow, looks scary, that one right there. And we almost got stopped on that one. Yeah, here's with you our. You see, that's where the greedy. All right, we got 6 contract. I think we go in right here, and when it broke this level, we add more contract to that, and our target is 94 right there. And 94. We did take a screenshot of that. Yeah, we did take screenshot right here. So our target hit at 15, at 11:15, hit 94. You see that picture and the recording. But we just try to play with ourselves. We want to remove our targets, which is how it's gonna run. We want to see let the window run. We want to do that experiment today, even though it's hard, right? It's very painful to give up all the game, and it did. That's the good thing. We make mistake and we learn. As you see right there, it's huge, and the profit is about $9,000. But we want to do the experiment, so we let it run. So we use Ninja Trader, because we use top step right now. We use the challenge top step, and right there, and you see it hit it, and we refuse to get out. See that? And you can see that Next time it will not see, right? You see right here, it tested level twice and it failed to break. That where we need to get out, but we didn't, because we want to experiment to feel the pain and experiment the glory of let the winner win. See that? Yeah. Yes. Hold on. Okay, we need to open the second. The reason file. What's the I think right here. So we split to file. Yes, you see that? And now we're gonna look at the 94. See that? That's gonna hit right there. Hit that. You see that? The 94. It hit it. We move our stop loss, and it's backed out, and it tried to retest one more time before it go. You see, it do twice. Yes, it do twice, and then it fell, and you see, it get all the way down. Wow, who never thought of that? Yeah, that's where we get stop out right there. The very weak right here, the very long wick low, it stop it out because we move right there. So that's the lesson we learn. It's not always let your winner run. It depends on the day. You see that? And it all the way rip. So whoever cast this move and don't get out, pay a peak, pay heavy price right there. See that? Wow. Yes, so you got an idea right there. Pause this for now. So go back so we can recapture and learn. So basically it hit this target. But because this target is critical, we put the note right there. It's on the X1 and X4. Let's look at why that one is hit. Yeah, here's the 4-hour time frame. Right there. 4-hour time frame. 54 right there. It close to the Wednesday open, but you can see that the breakout level right here, breakdown and breakdown, retest yesterday, fell, and retest again today. So this is one of the key level, 53.94 right there. So we put a target right, but we just want to experiment. Let's see if the winner win. And here's what lesson we learned. So let the runner win. Let the winner run. We can't have our tongue twisted right now. Let the winner run. That's what the cliche, right? But it's very tricky. If not applied properly, it can fool the greed like we have, right? When we have more, the greed right there, and we keep moving our targets. So we should call the day and exit when it hit target. And another note we want to make is that we got to understand that when the market is set in the selling mode, every pop-up move will get sold up quickly. Therefore, if we go long on this pop-up move, we must get out and don't let the winner run. Yeah, we try to do that, but we try to do on the wrong day. And that's the beautiful thing. That's the beautiful mistake, right? So for the doji or range day, we got to take profits when it go above the open. That's another lesson we learn, right? Because the open is at touch the open at this level, and when it's above that level and it's a range day, you better get out. Otherwise, it's gonna retrace back to the open, and you see that it moving around the open because it's range day, accumulation day, so it's not gonna move far away from the open either side. So that's another lesson we learn. Huge lesson we learn. So we should get out right here when we see that don't move our targets. And what else we learned today? Yeah, by the way, we use Linux Trader, and also we use TopStat for the challenge, and we got $50,000 for a challenge, but we got we blows our stop loss. Basically, the stop loss limit is 2,000, and we blow it. So we have to wait for the next circle next month to reset it. So that's when we just trade on the Brexit now to get our Brexit going. So that's an idea right there. And yep, and I mean, we just get this start two weeks ago, but we so far we see we learn a lot, and it helped us to flush out a lot of our bad habit. You know, like we say before, start with a premise that we are a bad trader. Let all our bad habit play out. Don't try to hide it, or don't try to compress it. Let's play out, and that's where we learn and how to manage them. That's why we try Orca experience. You know, try to be greedy, try to be casting the the falling night. We cast a lot of this, and the last one we cast is right here, right? Because it's a setup that we saw. Yeah, we did see the smart money diversion also. Okay, we did check right here. We cast the 9 right there, and I think we get in this one is Q1. You see, it's whipped the south side liquidity from Q1 on the PM, and so we put a buy stop at 40.48, and the time we entry is 14.15. Let's see if we got this one right. $14.15. Okay, so no, we got right here $14.15. Do we succeed right here? No, we gotta stop out again. Yeah, we gotta stop out at this one 30. We're gonna stop out, then we go in again, and we saw a okay, we go in again. We go in at 15. Right, we go in at 15. We got stop out, and we go back in at 30. Entry time, no, that's not that one. The one is at 30 right here. So this one we go in at 14.30, because we're going to win at 15 right here. We put a stop out right here. We got stop out. So right here it rate the sell side liquidity one more, and you know what happened? We look at the smart money diversion. It happened. So it's a very high quality setup right there. It did happen. Smart money diversion. Where do we put that? Smart money diversion. Oh, maybe we forgot, but the idea right here. So the smart money diversion, it depends right here. You see the mark at 14.30. That is one of the critical time. If we see the smart money diversion right there, then that's a good time to go in. Otherwise, don't go in. right now. Here's the chart for the NQ. You see that? Oh, excuses. Right here, 40, 30 right here. It make a higher low, a low. A higher low. But this one make a low low. Do you see that? So at 30, pushing 30, the ES make a lower low, but 30, yeah, but the NQ is very subtle right there. Make a higher low, and that is a signal to go long. And we go long. We put a buy stop at 50.48, and we put our stop loss right here. It retraced, but we still stay in the trade. And right here, we thought that it's gonna reach the open. That's our target right there, open. But this guy we saw is flip, so we put more our stop loss just right here. So we get a good profit right there. We put in 10 contract because it's a practice. If the challenge account they don't allow us, you use 10 contract, maximum only 5 contract. But practice, so we just let our greed out, let it see how it play out so we can manage them. But anyway, we practice every day. That will make it better to manage our greed and our fear, and the technique we use, how to entry and how to set the targets. That's we learn every day. So we're here to make mistake, no doubt about it. We not try to hide that, and that's our mistake. We should not hide our mistake. Mistake, that's what we learn. We here, we make mistake, and we here to learn every day. The market teaches. And one last thing before we go out. So the daily buyout for today, right? We see it's open above the Wednesday close, and then we see the PR, BPR, which is balance break range, double retest on the M5 low time frame, and you also see smart money at 9:30, at 9:30 right there. Then it likely gonna go up, and we target 50.94 exactly right there. Oh, one more thing we put right here, and also a UDA swing at 9:30. Yeah, we need to add that confluence in there. Let's do that before we close for today. Yes, that put no, it's also meet or match, but match ICT setup, ICT setup model 1, which is a UDA swing. UDA swing. 0930 sweep, sweeping the Friday PM low. Yeah. Well, it's a note, so let's give it a color. How about that? It also match, I see. This one. Yep. Oh yeah, never mind. On M50, we just say on, we don't see it here, but on low time frame it's there. Okay. All right, I think that's it for now. Very exciting. All right, thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success coming our way. Bye for now and have a great evening.